right, let's be honest. Are you tired of stressing about which stock to buy next? Are you losing sleep, wondering if you picked a winner or a total dud? Everyone tells you to buy the dip and do your research, but here's a wild fact. Over a 15-year stretch, more than 90% of the highly paid professional fund managers fail to beat the market average. So if the pros, with their fancy degrees and teams of analysts, can't do it, what chance do we really have? What if I told you there's a way to invest that financial geniuses actually use for steady growth, and it doesn't involve picking a single stock? This is how you can own a piece of the entire market and finally start investing with some actual confidence. For way too long, we've been fed this story that to invest, you have to be some kind of stock-picking wizard, that you need to spend hours glued to charts, reading super dense financial reports, and basically trying to predict the future. This whole approach turns investing from a wealth-building tool into a high-stress, full-time job that, let's face it, feels a lot like gambling. You're constantly searching for that one needle in a giant global haystack. And the data's pretty clear. It's a losing game. Year after year, the vast majority of people who actively pick stocks, even the pros, end up with worse returns than if they had just sat on their hands. In 2024, a whopping 65% of large-cap fund managers couldn't even keep up with the S&P 500. And that wasn't just a bad year, it's a pattern. The system just isn't built for the individual stock picker to win. But what if you could just not play that game? What if you could change the rules and still come out on top? This is where the strategy that legends like Warren Buffett recommend for almost everyone comes in: passive investing. The idea is so simple, it's brilliant. Instead of trying to find the one magic needle in the haystack, you just buy the whole haystack. How do you do that? With something called index funds or exchange-traded funds, ETFs for short. Think of an ETF as a shopping basket. Instead of going through the store and buying just one apple, you buy a pre-made basket that has a little bit of everything. A single share of an S&P 500 index fund gives you a tiny piece of 500 of the biggest, most successful companies in the US. With one purchase, you own a sliver of giants like Apple, Microsoft, and Amazon. This isn't some new, trendy idea. It's a proven, time-tested strategy. Warren Buffett famously bet $1 million that a simple, low-cost S&P 500 index fund would crush a portfolio of hand-picked hedge funds over 10 years. And guess what? The index fund won by a mile. This is the real genius move. You admit that beating the market is nearly impossible, so you just become the market. So, how do you actually get started? It's way easier than it sounds. It's just a simple 3-step plan. First things first, you need a place to buy your investments. You do this through a brokerage account. There are tons of great low-cost platforms out there like Vanguard, Fidelity, or Schwab, and you can usually open an account in just a few minutes. You really don't need to get fancy here. For most people, a single fund that covers the whole market is all you'll ever need. A great starting point is an S&P 500 ETF. Look for popular, low-cost ones with ticker symbols like VOO, IVV, or SPY. When you buy one of those, you're instantly spread across 500 companies, which is so much safer than betting your future on just one or two stocks. Historically, the S&P 500 has returned an average of about 10% a year, which is an incredible engine for building wealth over time. This is maybe the most important part because it takes all the stress and emotion out of it. Set up an automatic, recurring investment into your fund every single month. It doesn't have to be a lot. $50 or $100 is a fantastic start. When you invest consistently like this, you naturally buy more shares when prices are low and fewer when they're high. You never have to guess about timing the market again. This is where the real magic kicks in. Compound growth. Your money earns returns, and then those returns start earning their own returns. It's like a snowball rolling downhill, turning small, regular contributions into serious wealth down the road. When you follow this strategy, you completely change your role. You're no longer a stressed-out gambler trying to guess what happens next. You become a disciplined, confident owner of the world's greatest companies. You get to benefit from the growth of the entire economy, not just a tiny, risky slice of it.
This is how you invest like a genius, not by trying to outsmart the market, but by refusing to play a game that's stacked against you. If you're ready to stop guessing and start building real, long-term wealth the smart way, do me a favor and hit that like button and subscribe for more simple, powerful tips. It really helps other people find their way to this kind of financial confidence. Thanks for watching, and here's to investing in your future.